My name is Andrew Stotts, and I want to welcome you to our Valuation Masterclass debates. This is a new thing that we're launching with the Valuation Masterclass, and it gives a chance for our graduates to present their work, present their thinking, practice their skills at debating, and it helps the community think more about what's the buy side story and what's the sell side story. This is a great opportunity, particularly if you own this company. Now, the company that we're going to be doing today is Chevron. One of our contestants is going to be a buyer of Chevron, and one is going to be a seller. And before I get into the Chevron, I'm going to give you a little background on Chevron. But before I do that, let me bring in our debaters. So the first debater, Anusha, welcome.
Hi, Andrew. Hello, everyone.
Yeah, and you're going to be representing the buy side, that you are a buyer of Chevron. And here we have JP, who is on the sell side, saying he's a seller. How are you doing, JP?
I'm doing fine. Hello, everyone.
And why don't let me just introduce you guys to the audience first. So Anusha is from Delhi, India. She's a master's student in the Indian Institute of Foreign Trade with a strong passion for equity. 19. And JP is a CPA from a small town, Davao, I believe. He aspired to a career beyond audit and set his sights on equity analysis to deepen his expertise. He attended the Valuation Masterclass Bootcamp number 3 and Bootcamp number 16, sharpening his financial acumen. With dedication, he studied for and passed the CFA Level 1 exam, paving the way for his dream career. Today, he thrives as a corporate financial analyst in the heart of Manila. So again, welcome to both of you guys. And before I get started, I want to give people a little background on Chevron so we know what we're talking about. So let me do that while you guys just wait for a second and get ready to launch the show. So Chevron is one of the world's largest oil and gas companies, headquartered in California. It operates in over 180 countries and is involved in basically every aspect of the energy sector. Let's take a look at its revenue structure. About 77% of its revenues coming from downstream operations like refinery, marketing, chemicals, and 23% is coming from upstreams, mainly meaning oil and gas exploration. We can see the share price here hit a low of about $50 during COVID and has hovered around, let's say, maybe 130 to 170 or so over the last couple of years, kind of sitting there, not doing a lot. Let's look at consensus for a moment. We can see that there's 26 analysts currently covering the company, and the rating is 2.1 on the scale from 1 to 5, meaning it is a buy. Right now, target price has an upside of about 11% on consensus, and expecting about 6% revenue growth in 2006 and also 2026, and also about a net margin of about 12%, which is an increase from 2025. Now, we know that analysts' forecasts and all that can be questionable, but let's look at our world-class benchmarking scorecard to understand the company. We can see a score of 1 or 2 is world-class, and 9 or 10 is the worst. And when we're comparing the company, we're looking at 270 large energy companies worldwide. The past 12 months, the company is ranked at about a 4, which is slightly above average, but that's compared to slightly below average of 6 in 2023. And in 2022 and 2021, they were doing quite well. So let's say slightly above average in their recent performance. Finally, let's take a look at Chevron on our global stock tracker. If you're not getting our global stock tracker, click the link and we'll make sure we get you on the list. I use this every single week. Here we can see the company's net profit margin according to this information. This is historic information, was about 9% in 2024 or so, and ROA about 7%, PE about 16, price to book about 1.8. EPS growth has been down by about 14.5%, and price is down by about 3%. It's a relatively low risk stock with a net debt to equity of only 0.1 and a very, very low beta, meaning it doesn't have a lot of volatility relative to the market. That gives us a little background. Any observations before we get started from you guys about Chevron and the numbers I just went through?
I mean, like you definitely said, it is a low volatile stock and makes an attractive investment. So I
Hmm.
hope the audience also noticed that.
Yeah, I mean, I have to say that when you look at it, it's kind of, it's kind of 50-50. It's not like it's screaming buy, but it's not screaming sell also. That's what I take away from that. I'm just going to go through one last thing and just introduce the format of today's debate. So the format of today's debate is we're going to have opening arguments. Each participant's going to get 3 minutes to present their case. And then we're going to have a rebuttal round where each will have 3 minutes to counter the opponent's arguments and to restate their arguments. And then we're going to have a Q&A section that's going to last about 6 minutes. It'll be me, and also the audience can submit questions just as we're going through the presentation. And also in the Q&A section, we'll go through questions, and then we're going to go to closing statements. So now, this is the beginning of the debate, and before we get into it, Anusha, are you ready to go?
Yes, I'm ready.
Okay, so I'm gonna take you, JP, out of the screen for a moment, and I'm gonna put Anusha in here. So hold on one second. I'll bring you right back. Okay, so now before we get in, I'm gonna just say, let the games begin. The debate is going to start. I am going to leave the room, and I'm going to come back when 3 minutes is up. I'm leaving the room now, and I'll see you in 3 minutes.
Okay, good evening, everyone. I'm Anusha, and today I'm here to strongly advocate for a buy recommendation on Chevron. Chevron is the second largest oil and gas company in the US with a market capitalization of more than $270 billion. And despite the recent market fluctuations, Chevron still stands out as a fundamentally strong company with robust growth catalysts. And this position makes it a compelling long term investment. Chevron is undergoing significant expansion through its oil field projects in Kazakhstan, its developments in Gulf of Mexico in DJ Basin, also its $53 billion Hess acquisition. These moves will deliver significant production growth and long-term value, with the Kazakhstan expansion alone boosting output by 25%, which adds up to 1 billion barrels per day of production. And this will lead to $4 to $5 billion of free cash flow for Chevron, which is huge, which in turn adds value to shareholders' returns. Despite temporary delays for the Hess acquisition, the Hess Corporation secures a 30% stake in Guyana, which is one of the world's fastest growing oil regions. And once Chevron gets this Guyana under its portfolio, it is going to be like a huge thing for Chevron. It reinforces Chevron's long term production capacity and cash flow stability. Now, that was about the expansions. Chevron, other than growing, other than expanding, it is also diversifying. It's diversifying into energy technology, more of AI technology, where it is um, trying to build AI power plants that will supply power for the AI demand. And these power plants will be set up right next to the US data centers, which will reduce the problems of transmission and things like that. And according to a report by Goldman Sachs, we know that the AI power demand is going to surge from 8 gigawatts to 23 gigawatts by 2027. And Chevron is strategically positioning itself by partnering with GE Vernova to build natural gas power plants to cater to 17% of this demand. And hence, it has like a huge scope for expansion post that. And these projects are also designed in such a way that they can integrate lower carbon intensity solutions. Like we know that there has been like a constant pressure on companies like Chevron and other oil and gas companies to move towards a more environmentally safer options. And to do that, Chevron is already integrating to lower carbon intensity. And this solution that has Chevron has come up with can capture more than 90% of carbon dioxide that is being produced from the turbines, which is like a huge thing. And this shift highlights Chevron's ability to capitalize on emerging energy trends, securing new revenue streams beyond oil and gas. I know my opponent can raise a point saying, oh, oil is volatile and it keeps fluctuating. So in order to tackle that, Chevron is already thinking ahead. It's growing its new energies business. It's diversifying its portfolio, right? So additionally, Chevron is very disciplined in its capital management. It further strengthens its investment appeal. It has planned to cut down on its capex for this year, which is like lesser than 2024, $2 billion lesser than 2024. While doing this, it is also allocating to high return, low carbon projects and improving the shareholder value.
All
And
right,
Chevron,
that's it. Time's
okay.
up.
Okay,
Okay. So,
lastly, I just want to reiterate that
yep.
Chevron is growing, diversifying, and returning value to its shareholders. So, therefore, I recommend buying for Chevron.
Okay, excellent. Now I'm going to take you out of the room and we're going to bring in JP. So just hang on. All right, JP, are you ready to rock?
Hello, are you able to hear me?
Yep, we hear you now, and I'm going to
All
leave
right.
the room now. So as soon as I leave, just take over. Ready? I'm leaving now.
Hello, I'm JP, and I was once in the Valuation Masterclass Batch 16. Like Anusha, I resented Chevron, and back then I rated it as a buy. However, nearly a year has passed, and since then, I am here to tell you that whether you're a growth investor or a value investor, I believe that Chevron is now a sell, and I'll tell you why. If you are a growth investor, you want companies that are expected to have growth higher than average earnings, revenues, or market share compared to the rest of the sector. But let's ask ourselves, is Chevron truly doing enough to warrant above average growth? Have you seen its stock price for the last 5 years? Yes, it rose significantly in 2021 and 2022, but this is due to the post-pandemic surge in demand. We're talking about economies rising back from the ashes which fueled the oil and gas industry's growth. But where are we right now? We're coming down from the post-pandemic high. However, since 2022, Chevron has not seen significant changes in its market price. This is in spite of all the capex that it's burning, like what Anush mentioned, the 48 billion capex in Tengiz, or the 53 billion it wants to exchange via stocks in acquiring Hess Corporation. What does this tell us? I believe it tells us that despite all these big developments, the market does not see growth in Chevron. In fact, it may even see Chevron as risky. If you are a value investor, you want shares that are undervalued relative to the intrinsic value or peers. So let's look at the peers. Using trailing 12 months PE ratio, Chevron has the highest PE ratio at 16.37 compared to Exxon, Shell, and Total Energies, which average only 12.35. That means relative to its peers, Chevron is really overvalued. The stock price is nearly 159. I do not believe that such price is justified for the following reasons. First, let's look at the global economy. According to the International Energy Agency, there is a slowdown in oil demand growth. Back in 2023, it was 2.1 million barrels per day. However, in 2025, this is projected to be only 950,000 barrels per day. How could this happen? Well, let's look at China. It was once the cornerstone in global oil demand growth. However, its economy has since slowed down recently. At the same time, vehicles powered by alternative fuel sources are cutting into oil demand. Thus, the EIA forecasts lower oil prices in 2025, and this will surely hurt Chevron's operations. In fact, it already hurts Chevron. Look at 2024 net income, which decreased by 17.35% due to lower refining margins. And I believe this trend will continue far into the future. Finally, let's look at the Hess acquisition, which has been in limbo since 2023. I believe the reason one of the reasons CVX prices is high or is staying at 150 is because it has partially priced in the Hess acquisition. But we have to look at the facts. Chevron has already got the approval for it and the FTC, the shareholder approval for it and the FTC approval, which is great for Chevron. But let's look at how risky it is, because now we have Exxon and CNOOC, which are contesting the claims that it has to the Guyana assets. So if we look at it, they are saying that Hess does not have the 30%, should not be able to pass it to that 30% to Chevron, and that's not a good look for.
All right.
So that makes Chevron a really risky asset.
Okay, that was exciting. So I'm going to take you out for a second, and I'll bring you back in just a bit. So hold on one second. So that was quite some opening statements. I think the first ones by Anusha had me think, oh, no way JP's going to come back, but he has come back. And so we're going to have some fun here. So we're getting ready for the rebuttal round. Remember, this is a valuation masterclass debate, of course, sponsored by the Valuation Masterclass Bootcamp. If you want to build these kinds of skills, join us in Valuation Masterclass boot camp. All right, it is time to get Anusha up. Anusha, are you ready? You got 3 minutes for rebuttal. Are you ready to go?
Yes, I'm
Okay,
ready.
I'm going to remove myself.
Yeah. Like John mentioned, he was talking about the past growth and past things for Chevron, but let's not stuck be in the past and let's think about the future. Going ahead, Chevron, it was not just Chevron that suffered in this year due to oil prices. Oil prices were low, and all the oil and gas companies did suffer a little bit. But despite all of that, Chevron was able to it was able to give up to 27 billion of you know it was able to return $27 billion to its investors through dividends and share buybacks. So just a small dip in revenue did not stop Chevron from its growth and from being able to provide value to its shareholders, right? And also, one more point that was raised by my opponent was about the capex. Chevron did have a heavy capex, but it is going to, like I already mentioned, that Chevron is going to reduce its capex by $2 billion. And how is it doing so? The Permian, Chevron has a huge dominance in the Permian basin, but now the growth in Permian basin has been stabilized. That is why Chevron is moving away from Permian basin, as in it is growing in Permian basin but at a steady rate. So it is looking at other avenues like the DJ basin and the Gulf of Mexico, like I already mentioned, and Kazakhstan expansion. So Chevron knows what its weaknesses and strengths are, and it's acting on its strengths. And I think my opponent also mentioned about the Hess Corporation, deal that is being blocked currently because of ExxonMobil. But Chevron's management is quite confident that the deal will get through. But even if, let's say, even if in the worst case scenario that the deal does not go through, this will not have a significant impact for Chevron, because even without Hess Corporation's effect on Chevron, you can see how well Chevron's operations are, like how strong its operations are. It is still delivering, it will still deliver a high revenue growth because of its expansion projects. And despite because of the there could be geopolitical tensions, oil price fluctuations, it is diversifying into energy technology arena as well, where it's investing in the AI power plants and so on and so forth. So Chevron is a forward looking company, it's a future looking company. It is not stuck in past, it is learning from its mistake, and it's definitely growing.
Okay, excellent. So let's now hear from JP and hear what he has to say in his rebuttal. So one moment. All right, JP, are you ready for rebuttal?
Are you able to hear me?
Yep.
Okay. 1, 2, 3, go. All right. So Anusha mentioned something about AI plans, but let's look at this in a way that this is strictly in the US, and when we're talking about Chevron, we're trying to look at like the global oil itself. I don't think like merely providing for like AI plans in the US will help when we're looking at the slowdown of the economy in the globally, and therefore this will decrease the demand in oil and gas. And this is pretty harmful to Chevron and also a lot of other companies. She also mentioned something about Tengiz, and this is her strategy, right? This is her number one, this is her crowning jewel. But let me tell you something about Tengiz. It's highly risky. Why? Because this is located in Kazakhstan, and Kazakhstan has a long history of government interference in foreign oil projects, particularly in Tengiz and other oil fields in there. Like for example, in 2016 to 2024, the cost ballooned from 37 billion to 45 billion due to regulatory delays and Kazakh's labor issues. Why does it matter? Because Kazakhstan sees Tengiz as a national asset and has historically squeezed higher taxes and royalties from Chevron. And also, when we look at 2022, there is political unrest and potential risk to Chevron. Like, there is ongoing discussion with the government to have higher oil taxes and local hiring quotas, which could increase costs for Chevron's Tengiz expansion. So, if you look at this, even though the amount of capex also that it's spending on Tengiz, is it really like justifiable given that the big risk will be there for this particular asset? And then let's move on to her saying that it's good that Chevron is like diversifying away from oil and gas, but can we like ask ourselves what Chevron is mainly? It's an oil and gas company. Why should it be spreading itself too thin when it should be honing on to more oil and gas and be more specialized in its field. And this is why I want to reiterate that HES is a necessary catalyst for its growth, because without HES, I don't think that this share will fly. And let me tell you, she told she told us about like what's the worst case scenario, right? I will tell you what the worst case scenario is. If this is blocked, right, and then by if Exxon and CNOOC are successful in taking it, then what will happen to the share price? I believe that it will drop. Why? Because this has already been partially priced in by the market. And what that will do is that, Guyana is the crowning jewel of this entire Hess acquisition. If you remove Guyana assets, that will pretty much make the Hess acquisition a bit worthless, and a lot of shareholders will be asking themselves, was it truly worth exchanging 53 billion in shares just to get, Hess? This will be a catalyst for its downfall, and that's why I say that you should sell Chevron now, because it's really, really risky. They are putting too much weight into this Hess acquisition, and I
Okay,
believe that Exxon will just block it, and
great.
they really have the preemptive right to it. So
Okay,
there.
so let's now bring in Anusha. I'm in the middle of you two. Both of you have done a great job. So proud of you as your teacher. So way to go. Before we go on, what we're going to do now is we're going to go into the Q&A round. Remember, this is a Valuation Masterclass debate sponsored by Valuation Masterclass Bootcamp. Of course, if you want to build the skills that these guys are demonstrating, join us in a Valuation Masterclass. So why don't we start off with a few questions, and let me just go through and think about some of the questions I had. So one of the things that I was thinking about, Anusha, I'm going to ask you first question, and that is, that I think you've laid out pretty clearly that if things go well, they got a huge pipeline of growth ahead for the long term. But when I look at the share price and I look at the news about these things, it's kind of been out there for a while. Has the share price already, adjusted for that? Or what are your thoughts about that? Because if those were brand new projects, I could understand. But what is your feeling about that?
Well, the other than the Hess Corp deal that is being delayed, I don't think there was anything that was being delayed like too much. The Tengiz expansion just went on as expected, and the share price is significantly doing well, because the last time I looked at it was $150 and now it's at 157. So the share price is seeing an upward trend. So
Okay. And JP, if we look at your side, basically your argument, right, is that the market doesn't see the growth. But the fact is that this is a huge company with a huge opportunity ahead. And one of your arguments is that we're going to see a fall in consumption going forward, I believe, right? And maybe lower refinery margins. But what's the probability that you could be wrong in that assumption?
Well, I can always be wrong in that assumption, and that's the beauty of valuation, is that no one is truly right about the future. But according to my research, the International Energy Agency really believes that there is a slowdown in global growth when it comes to like oil and gas. Like for example, in 2023, it used to be like 2.1 million, but now it's just half of that at 950. So there's like a huge chunk missing, and that's why like I believe this will negatively affect Chevron
Okay. And
in the
Anusha,
long
we got
run.
a question from Zishan. He says, considering all economies are focusing on alternative energies, don't you think the government starting to regulate oil production will negatively impact Chevron?
Okay, there could be two things that can happen because of the regulation in oil production from majorly from the OPEC sector, OPEC countries. This could lead to an increase in the oil prices, which is a good thing for Chevron. And secondly, if there are stricter regulations in US, then Chevron is already kind of gearing up for it, getting ready for it. It has established its new energies business, where it is only focusing on reducing carbon carbon production and things like that. So it could affect Chevron, but Chevron is kind of ready for it.
And JP, if I look at you're talking about the Tengiz facility or the production in Kazakhstan,
Yes.
and you're basing a lot on there's risks that they're not going to really receive the cash flow from this.
Yes.
But if you're wrong about that, it's a huge amount of, it's a huge impact. I'm just curious, your thoughts on that.
Okay, so when it comes to like Anusha's arguments, she was considering all the bright and positive stuff that Tengiz will bring. But I'm here to tell you that historically there has really been government interference by Kazakhstan. And why won't they? Like, if you look at it, like, if you're a government and you have like foreign oil in your um, land, like, why not squeeze as much dollars out of them? That's extra income for your government. They have that, you know, incentive to do that. And they have already done that a lot of times in the past, and I think that will continue on in the future. And
Oh,
yeah,
and let me ask you another question. Anusha has made a pretty good point that they've returned $27 billion to investors. Maybe the share price isn't going up massively, but you're still getting some huge returns. How would you respond to that?
well, look at the share price right now. It's about 150, and they already announced this this share buyback plan and dividends. It has been announced like long ago. Like I was in Valuation 16, and I already like read through that. I believe it's already factored in into the share price, but I don't think that it's powerful enough to really send Chevron's price upwards because it's already been considered. So if you want to look at what the major catalysts are for Chevron, it's really the Hess acquisition, and Tengiz. I believe it's already been factored into the price because it's been done already, right? So really, like, I think one of the reasons why Chevron's price is like just hovering at that 150 is because the market is anticipating what the results of this Hess acquisition. It's been going on for a long time. Like I think it was 2023. I was in VMC 16, and this is like one of my arguments that the Hess Corporation acquisition will be the reason why we should buy Chevron. But it's been years, Andrew, like years, and it's like it hasn't moved on from that.
Okay. Okay.
So yeah.
Okay. So
Like
Anusha,
how much long should we wait?
one of the Kritesh says, as per U.S. EIA forecast, oil prices are expected to fall, and so won't that affect revenue, and how does that affect your arguments?
Well, if oil prices do fall, it will affect Chevron's revenue, but I don't think that can stop. It happened in 2024 as well. The revenue did fall, but it was just like from $196 billion to $193 billion. There could have been like a huge impact, a significant impact, but it was not so because Chevron is a strong, it's a fundamentally strong company in its operations, and it is going to keep on continuing that. But even Chevron knows the risks of oil price falling. That is why Chevron is transforming itself. It is diversifying itself.
Okay. We're almost out of time for the Q&A session. Just one other one from me. When I hear about the AI plants, at first it sounds cool, but then I think, oh, is this like small scale, and how is it going to be more profitable than what they currently do at huge scale?
No, well, the AI power demand is going to only increase and increase and increase, right? From 8 to 27, that is a lot in by 2027. And Chevron, its current production capacity is only able to cater up to 17% of the demand, which leaves it a huge scope for expansion. And it's not necessarily small scale, but Chevron is strategically placing its AI power plants right next to the US data centers, which
Yeah.
reduces the transmission costs, and it ensures the smooth flowing of the power
Okay.
electricity.
Okay. And JP, did you have something you wanted to ask or
But we
raise?
should note that this is like so far exclusively in the US. I don't think that they'll be the ones that's going to be powering China's data centers, for example. So this won't be really that substantial. Like if you're looking at Chevron, you need to look at it at the global scale. So if you're just looking at one country, it's really not
But
enough to like budge the share price. You need to look at it globally and like how this like data center will like compare to like the global demand. Because
Okay.
if you look at the global demand, it's shrinking
but
right now.
US
Yeah.
US
Anusha,
is a
how would you
huge player in
respond?
AI. US is still a huge player in AI, right? It's not just
So is
China that
China, but
US is
like I
China,
don't
but
think that
US is
Chevron will
still a
be
huge
supplying
competitor.
China.
And Chevron gets its 57% of its revenue from US. So it is a huge deal for Chevron to look at
All
US.
right. Okay.
But
So
it's gonna just be in
that's
one state, by the way.
yep.
So it's not that
But it's
substantial globally. You need
57%
to
of
look
its
at it
revenue.
globally for me.
All right. All right. Good. Excellent discussion and great for the audience to think about these things. That's the whole purpose of this. So now we're going to go into closing arguments. Remember, this is Valuation Masterclass Debate, sponsored by the Valuation Masterclass Bootcamp. If you want to learn the skills of company valuation and debating and all of this, just join us at Valuation Masterclass. So I'm going to leave both of you guys in for this period. And Anusha, you're going to go first. So why don't you go ahead and wrap up your closing statements?
Yes, so my opponent did raise some interesting points against Chevron, but I would like to say I would still stick to my initial arguments. I would still reiterate the fact that Chevron is a growing company. It knows its risks, it knows its strengths and weaknesses, and it's acting according to that. The oil price volatility has been brought up like so many times, and that is why if if there is like a supply constraint and if there is like supply restrictions, that will only drive the oil prices up, right? And that is beneficial for Chevron. And in case there is like a huge volatility in oil prices, which might not be the case considering that 2024 was like one of the most stable years for oil prices in the 25 years. So even if there's a huge oil price fluctuation, Chevron is ready for it. It's diversifying itself into energy technology, into carbon capture business, and many things like that. So I would highly recommend buying Chevron and reiterating the fact that it's growing, diversifying, and returning value to its shareholders.
Excellent. Okay. So I'm going to turn it over to JP. Why don't you end this discussion by your closing arguments?
Okay. So Anusha has been really a tough opponent, and I am honored to have been put up against her for this first debate in, Valuation Masterclass. But and she really put in like some good arguments. But we need to ask ourselves, has it already been priced in the market or not? Because if you look at Tengiz, I believe it's already been priced in. And the AI, it's already been priced in. The share buybacks that she says, that's like 27 million, that's being billion like being returned to stockholders, and the dividends, like that's great, but it's already been priced in by the market. I don't think these things will be the ones that will move Chevron's price anywhere. So I'm gonna tell you what I believe is not priced in. I believe that the market hasn't priced in the risk that is associated with the Tengiz, because right now like people are excited that there's like a 48 billion going into Tengiz, and like it's so exciting that Chevron can get this amount of cash flow, free cash flow. But if like look at it, like Kazakhstan has been like really interfering a lot for like foreign oil companies, and this is like presents a risk. Another thing is the Hess acquisition, which I don't believe it's been fully priced in by the market. That's why I believe that the price is still at like 150 and hovering around that, because I don't think that the market has priced in like the risk that is associated. So what will happen if, for example, ExxonMobil or CNOOC wins the arbitration process? I believe that the share price will really go down, because a lot of investors are like hooked on the idea that there may be hope that like Chevron will be able to will be able to win the Guyana assets, and that's like a lot of billions that will be flowing into it. And that's why like if, for example, they lose the arbitration process, that's when I believe it will go down. And because of like the risk also in like all their assets like in Tengiz associated with it, right? That's why I believe that Chevron should be a sell. So thanks.
Okay. So hold on one second. I'm going to bring Anusha back in here. And there you are. And before we go on, just take a second. Hold on. So that was the Valuation Masterclass debate on Chevron. Anusha with a buy and JP with a sell. Only time will tell who was right. That's the beauty of the markets. And for the listeners and viewers out there, what are your thoughts? Feel free to put your thoughts and questions in the comments. And that's a wrap on this debate. But before we go away, how do you guys feel? How was it?
Well, John did really raise some points, and I was like, I was nervous, I thought I was able to counter them well. What do you think, John?
I think Anusha did great, and she raised some great points too that had me panicking for a bit. Like, oh, Tengiz, what is that? And then, you know, it's the first time I heard it because I haven't been like on the loop for with Chevron for a long time. But it's been so fun. I've been having like a stressful office hours like right now, and I needed this as like an outlet to like
That's great.
vent out all my frustrations.
And
So thanks for inviting me.
yeah, and I want to say you guys both did a great job. You know, in debate, you just never know how it's going to go. And that's what makes debate so great. But one of the reasons why we're doing this is to help people see both sides of the story. And you guys did a great job at bringing that out. So I want to thank you for doing that. And I'm going to remove you from the group. Just hang on and I'll be back to you in just a second. But for the audience, let me talk to you for a moment. Wasn't that amazing? Fantastic. Two very smart graduates of the Valuation Masterclass Bootcamp going at it. You know, my mother says to me when I was young and I'd come home and blame something that went wrong on someone else, she always said there's two sides to every story. Nowadays, we don't get two sides to every story because social media and other things are only feeding us the side that we believe in. These Valuation Masterclass debates are critical to help us start to get both sides of the story. So again, the Valuation Masterclass debates are sponsored by Valuation Masterclass. If you want to learn the skills of valuation and build a competitive advantage where you can get up here and debate just like JP and Anusha, join us at valuationmasterclass.com. My name is Andrew Stotz, and